It's really the bank rep, I think, holds the key to the numbers, or get them to get us the official documents. Like if you want us to give you the final numbers, a week or 2 weeks ahead of closing, the only way we're going to be able to do that with absolute certainty is we need the mortgage document and the statement of adjustments from the seller's lawyer as early as possible. Worst case scenario, they've got more money than they need, and not the other way around.
What is up, YouTube? Matt McKeever here, and in today's video we catch up with Ryan from Carson Law, and he's going to be breaking down for us exactly what you can expect when it comes to getting an insured mortgage. So if you're unfamiliar with CMHC Insurance, we're going to cover that in this video as well. But you guys had some questions. We thought let's reach out to everyone's favorite Canadian real estate lawyer, get his answers, and let's jump into today's video. What is up, YouTube? Matt McKeever here, and we've got Ryan back from Carson Law. Hey Ryan, how's it going?
I'm good, man. How are you doing?
Doing well. And so in today's video, Ryan's going to be discussing with us, buying a CMHC insured property. And so oftentimes what these properties relate to, as an investor, usually I'm thinking of these as like a house hack situation, right? So we're going to buy a property, we're going to move into it. And because of that, we can potentially get an insured mortgage. And so in today's video, Ryan's just going to kind of walk us through high level some of the considerations from the lawyer or the closing perspective when it comes to, getting a insured mortgage versus a uninsured mortgage. So I guess, Ryan, first things first, I'm going to guess a lot of the time when you're actually doing insured mortgages, it's probably not even really for investors, right? It's probably someone buying their principal residence, the first house they're ever going to live in.
Yeah, I think you're quite right. I don't see too many real estate investors getting mortgages that are, the insured, which is typically CMHC, like you mentioned, or Genworth. Those are the two big players. I'm not sure if they're both doing it now or not. I think one of them stepped away during the COVID, when COVID hit, and kind of said we're not offering it anymore. But I mean, the principle of it is this insured mortgage allows the buyer to put down less than 20%. So 15, 10. I think you can go as low as maybe 5 with some lenders. But yeah, if you've got 20% or more down, then you don't have to get the insurance on the mortgage. The purpose of the insurance, in case people are like, well, why do they need insurance on the mortgage? It's because you are leveraged higher than that 20%, the 20% down. So you've only got 19% or more down. So the lender requires it to be insured under our laws, and basically the insurance company has the policy there for the lender's benefit, so that if you can't pay it and the mortgage goes belly up, and then they can't necessarily get the mortgage paid back through the sale of the property, the insurance policy exists to deal with making the lender whole. So that's at a very high level the purpose of the mortgage insurance, really, for these deals.
Yeah, definitely appreciate that context. So for anyone that's new to this entire process, maybe they've never bought a property before, maybe they've only bought a property that was a conventional mortgage, so they've never got an insured mortgage. What's different about the closing process or working with a lawyer, or is there any difference? Like if I'm buying a house, do I need to tell you right away that it's a CMHC insured mortgage? How does that usually all roll out?
I wouldn't say there's a lot of difference. In our preamble before we kind of started this officially, there's really one big difference that I can see on our end. We don't handle the deal and process our deals any differently if they're insured or not insured from the mortgage loan perspective. We go about it the exact same way. The only difference, and this is more of a piece of knowledge and education for the potential borrowers out there, is you need to make sure it's very clear with your mortgage representative, the person who's arranging it for you, whether it's a bank rep specifically at one of the banks directly, or your mortgage broker if you're using a broker. If you are taking advantage of or need to use the mortgage insurance because you only got 19% or less down, you want to make sure that that net amount that's coming to the lawyer, because that's really what you need to budget on. You don't need to know that your mortgage that you've been approved for is X, and then they're going to deduct the insurance. And that's where the trap is that I've seen happen. And it's not like something sneaky or illegal or anything like that. That's not what I'm trying to suggest at all. What I'm trying to suggest is, if Matt, you are my client and you have a mortgage that you've applied for, that you're using to close your purchase, and you tell me, hey, heads up, mortgage is coming from TD Bank, for example, it's going to be CMHC insured. My comment to you would be, make sure you talk to your rep at TD and make sure you know, are you getting a net 250,000 advance to us, your lawyer, from the bank, or is it 250 less the mortgage insurance and the PST on that mortgage insurance? Because that's greatly going to impact you and your budget. So that's really the big difference. That's really the only time or area I've seen our clients kind of get tripped up or have issues. Otherwise, I mean, if it wasn't pointed out in the documentation to us, it doesn't really impact the lawyer and what the lawyer's doing. It's really something that's more on the client's budgeting side, and then obviously their approval and process with the banks. I think it's a bigger deal on that side of the process. But I know that, and as you can imagine in the example I just gave, most of these insurance policies with PST are probably somewhere between 10 and 20,000 minimum, because of just the value of mortgages now. And so that could be a huge chunk of change that you haven't budgeted for. And if all of a sudden you get to a couple of days before closing, and we as the lawyers say, okay, we went through all your numbers, this is what we're getting from the bank, this is what we're going to need from you to close out the deal. It's the final amount of your balance due on closing, your closing costs of land transfer and registration in our account. And then they say, excuse me, why do I was expecting this much. I was expecting 20 grand less. Oh, let's take a look and see where there's a miscommunication. Oh, I thought I was getting 250,000 from TD Bank. Oh, well, no, they only advanced us 230. And the reason they're advancing less is because they've taken off CMHC and PST on that insurance. Well, I didn't know that. I thought I was getting 250 plus that, right? So that's the thing that that's the main thing that I've seen with the high ratio insured mortgages is, for us, that's where it could be an impact.
Appreciate you really bringing that to light, because I think it is an important point to note here on CMHC mortgages, high ratio mortgages, insured mortgages, whatever you want to call them. Oftentimes the reason the borrower is choosing to use that credit facility or that debt option is because they're probably tight on funds, is because they're trying to squeeze, into the biggest property they can get, or whatever the case may be. And so if you're going to be tight on your down payment funds, it is really critical that you understand that sequence of events and the exact dollars that the mortgage company is going to forward to your lawyer. And I guess if someone's a little bit nervous about that, Ryan, are they able to always reach out to a lawyer and get like an initial outline of what is expected to be the statement of adjustments, or are they able to get a preliminary kind of ballpark figure so that they can kind of get ready for whatever that total sum's going to be?
If I'm being completely honest with you, our office's approach is we really don't like doing too many like preliminary budgetings of numbers, because then clients get it fixed in their head like, oh, this is the number. And it's really hard for us to foresee everything until we actually just have all the like concrete documents in play. Because a lot of times, to be fair and frank, we're making the budget based on the information the client gives us. And in the example we just talked about, they only know what they know, and they don't know what they don't know, right? So that's why I've learned the hard way that it's easier to just tell the clients, and it actually ends up being less of a problem. It's easier and less of a problem if I just say, look, we'll get you the numbers as soon as we can, but I'm just giving you the realistic timeline and expectation that it might not be until, the day before closing, or it might be only 2 or 3 days lead up. You've got to do a really good job looking at the numbers it's really the bank rep, I think, holds the key to the numbers. or get them to get us the official documents. Like if you want us to give you the final numbers, a week or 2 weeks ahead of closing, the only way we're going to be able to do that with absolute certainty is we need the mortgage document and the statement of adjustments from the seller's lawyer as early as possible. So until we have the official mortgage documents and the official statement of adjustments from the seller's lawyer, we can't give you a final set of numbers. So we try to stay away from doing too much preliminary stuff because I think it's created more problems for us and the clients than it's created solutions. But that being said, do we try to map stuff out for people? Absolutely. If we do give preliminaries, we usually err on like a side of abundance of caution. We'll usually tack on like thousands of dollars more. And we'll tell the client that, we've done this for a reason, so that if there's something that hasn't been properly communicated or disclosed, whether it's the bank to them to us, or we've misunderstood something, we want to try to factor in as much cushion as we can so that worst case scenario, they've got more money than they need and not the other way around.
Yeah, definitely appreciate you providing that perspective. As we're talking about CMHC and just kind of wrapping up here, I guess one thought that did just cross my mind at the time of closing, is there a document that like you sign at the lawyers, or do you sign that with your bank in regards to stating that you're going to move into the property and stuff? It's been like a decade since I did an insured mortgage, so I'm a little bit rusty on remembering the sequence of events there.
Yeah, I mean, all the lenders, as you probably are familiar, they all kind of use their own documents and they have their own process. There's similarities, lender to lender and bank to banks, but none of them have like the exact same documents and the exact same process, so to speak. I don't think there's really anything that we technically get signed that specifically says, you acknowledge and agree that this is a CMHC, Genworth insured mortgage. Other than if it happened to be noted as such in the mortgage commitment or mortgage disclosure document, which some of the banks and lenders have you sign that with us. Others don't have you sign any of that stuff with us because they deal with it internally. It's typically the broker deals that will have you sign those kind of documents via the lawyer, and sometimes with them as well. Most of the major banks, there's very little like banking documentation that you sign with us specifically. They're typically doing it directly. We're not signing too much bank specific documentation.
Awesome. I appreciate that. So again, just a reminder for everyone watching this on YouTube, the reason this video even came into fruition is you guys hit us up with some questions in the comment section on previous videos, asking about, are there any legal implications when it comes to CMHC and insured mortgages in Canada? And we wanted to respond to you. So hopefully this answers your questions. If you have any other questions on this subject matter or any other legal questions, feel free to jump in the comment section. And Ryan and I will make sure that we pick it up on the next video. Really appreciate you guys watching. And as always, Ryan, really appreciate you just sharing all your legal expertise. You're always a wealth of knowledge.
Yeah, thanks a lot, Matt. We really appreciate being on.
Thanks again to Ryan for taking the time. And if you guys have any additional questions on this subject matter or any other questions you'd like answered by a Canadian real estate lawyer, jump in that comment section down below. We're always looking for your inspiration, and we'd love to make more videos with Ryan. We know you guys are enjoying them. And if you enjoyed this video, smash that like button, hit the subscribe button if you're new to my channel, or you're just one of the jerks that hasn't subscribed already. Please do so. We can see that 50% of you haven't done so. And it just seems like an affront to our goal of trying to reach 100,000 subscribers. We'd really love to hit 100,000 subscribers. Please subscribe. Thanks, guys.